Hi and welcome to the latest quarterly market update. As always, I'm joined by Steve Garth from Principia Asset Consultants. Thanks for joining us, Steve.
Yeah, thanks Rob. Great to be here as always.
Excellent. Steve's here today to share his thoughts and insights on what's happened over the last 12 months and the last quarter. We've made it through to the end of the financial year and it's been some really strong returns for the last 12 months. What can you tell us about the returns from the markets over the last 12 months, Steve?
Yeah, look, for a financial year, it's been a very strong financial year. Australian market up 12.1%. Now, that's higher than the average financial year return over the last 30 or 40 years. It comes in about 10%. So 12.1% is super.
Yeah.
And the international markets, man, they're up near 20%. Again, way higher than their long-term average. So if you're on a diversified portfolio of Australian international shares, you've had a cracker of a financial year return.
It's been a great year, yeah. So we saw excellent returns over the full 12 months. What did it look like over the last quarter?
Yeah, well, as you know, Rob, any great long-term return comes with a few bumps and grinds along the way, and you can see in the chart here where we're showing the daily returns of the Australian and US markets. Quite a bumpy ride. The start of last financial year, things weren't looking so good, and then it really took off towards the end of last year. But at least in Australia, it's come to a bit of a halt in this last quarter. You can see at March, we kind of reached our peak, and the market's kind of bubbling along there. Now, the US keeps going up. We'll talk about that a little bit later. In Australia, a couple of things happening. Of course, inflation is still quite strong. There's a possibility that the RBA will raise rates, so that's making the market cautious. And then secondly, you know, in our market, it's all about financials and the miners are not doing very well. Iron ore prices drop because there's no demand from China. So that's sort of balancing out the returns, giving us sort of a fairly flat return.
Yeah. And what did it look like in other markets, other developed markets around the world?
Yeah, well, interesting, as you can see in this chart, other developed markets are also having this negative or flat quarter. And once again, it's got to do with inflation, economies are slowing, and even though in some markets interest rates are coming down, I think the markets are still sort of very cautious about how that's going to play out. If you like, markets seem to be in a bit of a holding pattern, Rob. You're kind of waiting for the economic air to clear to see where to go with it, with the exception being of the US in this chart.
And is there a particular reason why we've seen the outperformance from the US side as opposed to the Australian shares?
Yeah, look, that is a great question. It's not like the whole US market is doing well, which is often the implication. It's actually a couple of stocks that are doing really well. In fact, it's worse than that. It's one stock that's doing phenomenally well. And the audience may have heard of NVIDIA. Up till last year, I don't think we'd heard of NVIDIA, but you can see they're up 190% this year. Now, here's the thing. The three largest stocks in the US are Microsoft, NVIDIA, and Apple. Collectively, they make up 20% of the S&P 500. So when people say Australia's a concentrated market, you go, well, yeah, so is the US. But you can see in the chart that Apple and Microsoft, they've done okay, but there's nothing phenomenal about it. It's NVIDIA that's really driven the returns. So the US, those strong returns we're seeing from the US are kind of down to NVIDIA and the hype around artificial intelligence. I'm not saying we're in a bubble, but I think people are getting a little bit cautious that perhaps we might be putting too much emphasis on the future economic benefits of AI. And you can see in the last few days of June, NVIDIA had a bit of a wobble there. So again, I think markets get a little bit cautious about how well that stock has done.
Yeah, okay, yeah. Overall, those some great returns, both across Australian and international markets. And it just goes to show you having that more diversified portfolio and how important that is. To mix it up between a bit of Australian, a bit of international, you never know which market's going to outperform.
Yeah, so absolutely right. And of course, keeping the long-term focus.
Absolutely.
Yeah.
Yeah, perfect. Well, that's it from today. It's been a fantastic year, fantastic run up to the end of the financial year. Thank you for joining us, and we'll see you all again next quarter.
Great, thanks.